weg. 1 2 1 2 1 2.
Trading is all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground, with a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.
One two one two. Good afternoon, ladies and gentlemen. $1 million, 2 million, 3 million. Hello, hello. Can you hear me?
Yes.
Hey,
Yes.
Shwami, how you doing?
Yeah, I'm pretty good, Thomas. How are you? How is your
Very
health?
good. Good, thank you. Thank you very much. Much better.
Hello, hello.
Quick test. Okay, it seems like the video is okay, sound is okay. Welcome back, everyone. So, long time. Haven't seen you, haven't heard you, so it's good to be back. Today we are going to have the almighty CPI in 46 minutes. So, who's ready to trade CPI?
We are.
Hey. Okay. So we have 46 minutes. CPI is going to be a very important data today. And also the whole week is going to be extremely important. It's one of the most important weeks of the whole year. I'm not sure how many people actually realized or understand or know about it, but this is one of the most important weeks of the whole year. Who can tell me why is it the most important week of the year? No one? That's quite shocking. We just discussed this in the morning briefing.
Can I say?
Yeah, sure. Go ahead, Andre.
CPI and the end of the year. So, yeah. And PMI, I think it's this week.
Rate cut decision as well. So to continue for quarter two next year.
Yeah. So, Adam, it's rate decision. It's not rate cut because we don't know whether they're going to cut it. You said the same thing this morning. The expectation, and I think I know why you're saying it's a rate cut, because the expectation is, the Fed is going to not raise interest rate. And the market interprets it in a quite, how to say, funny way.
You see how they decide not to cut or cut whatever it is. You see, the war takes effects on gold as well. So how would that affect on gold? Would there be manipulation?
If
they don't decide to cut it and gold carry on still flying.
So if they leave it unchanged, right?
Yeah.
In my opinion, if they well, there's two ways. So it depends really on the market sentiment, the current market sentiment. And if you look at the gold chart, last week gold reached a new all-time high at 2,100. Let's call it 2,149. And the reason for this is because President Waller, who's a voting member in the FOMC, and Jay Powell, no, it was actually Waller, who's one of the most hawkish member of the FOMC, voting member. He said that maybe it's time for the Fed to think about the interest rate cut. So decrease of the interest rate. And this has led into the spike on gold. Of course, there are many variables, dollar weakness, the war in Middle East, but I'm highlighting the Waller speech because it was one of the biggest culprit in this spike up. So 2 weeks ago, 1st of December, the market sentiment was bullish because the market was expecting interest rate to be reduced soon because of the commentary. But shortly after, and this was the Biden news, or the Waller news, and shortly after, the gold just came back where it started and even went lower, below 2000 to 1975. So it went up to 2,150, gone down to 1975. I mean, what the fish is this? And the reason for that is because the market sentiment has changed since the speech of Mr. Waller. And the reason for that is because markets are changing, data is changing, data coming out every single day. And in between the Waller speech and the current price level, there was an NFP. And you can see, where was the NFP? I think it was somewhere here. So basically, NFP was a big surprise to the upside. Non-farm payrolls, actual 199,000 versus forecast of 180. Previous was 150. So you can see that compared to the previous one, it's a whopping 33% increase in non-farm payrolls. That's how strong the job market is. And the labor market is there with its limited capabilities to provide, supply labor to the job market. So long story short, the market sentiment changed since the Waller speech. Waller speech pushed the price up, and then the data slowly started to push it down. And the reason for that is because the market wants to believe that it's the end of the rate hikes. The market wants to believe that gold can go higher. But the reality is that if you listen to Jay Powell's speeches and if you look into the data, CPI data, which I, by the way, follow very thoroughly over the past few years. If you listen to Powell's speeches, Powell never ever said that they're going to cut interest rate in January or in December or in February. He said that they need more evidence that inflation, is in control. And so far, yes, inflation has come down from 9.5% to 4%. Or 3% if you look at the headline CPI, but the core CPI is still at 4%. So, and they understand that inflation doesn't just miraculously go away. It takes time, a lot of time. So every single time Jay Powell comes out and opens his mouth, he warns the markets like, don't be foolish. I mean, we're not going to cut interest rate yet. We need more evidence. And these are the times when the market is shaking up from this hysteria of, pushing price up to 2150, and then the data tells otherwise. The data tells that inflation is still a problem, inflation is still with us, and the Fed needs to work on it. And the first step is that the Fed not raising interest rate, which they haven't done in 6 months, I think. But the next step, or the next question is, when should they reduce the size of interest rate? And truth to be told, I don't think they're going to do it before April or May, even June. They need to keep interest rates higher for longer. And that was the only communication that has ever left Jay Powell's mouth in the past 12 months. They're going to keep interest rate higher for longer. Did I answer your question? Sorry.
And yes, that makes more sense.
Yeah, so it all comes down to understanding market sentiment and reality. So you often hear the saying, buy the news and sell the fact. Well, buying the news is when the market is in an upbeat mode, risk on, full margin, no stop loss, all that crazy things. And yes, it does happen sometimes, but when the reality sobers up market participants, especially bulls, that's when the sell-off starts. Now, we are clearly in a sell-off mode because the market, smart money, or that's the fixed income market, smart money, by the way, and stocks is like the hot money. So my view on gold is that, yes, it's going to be a tough week. I wouldn't feel confident and comfortable to say it's a buy or sell because we need to wait for data. Right now, I'm sitting in some buys, and let me just show the live positions, but I'm going to close it down soon because CPI data is coming up, and we don't know what the CPI data is going to be. If it's in line with expectation, which is quite inflationary, then gold is going to sell off. But if it's actually softer than the forecast, then we have a good chance that gold is going to revisit 1993 and then 1997. So my first take profit, if I hold the position for a little longer, like 10 or 15 minutes, and if it pushes up before the CPI, which, by the way, that's why I'm front running, because I'm expecting price to push a little higher, at least to 1992. But that, if you look at the chart, if you're a technical trader, you can see that we have, oh, how fucking hate this MetaTrader charting. You can see that we are, or the price action is printing a beautiful channel, an upward ascending channel. This is called the up the stairs and down the elevator. So for now, until this breaks, until this breaks, I'm in a buy. But if I go back to trading view, you are going to see that I'm expecting a sell-off, a continuation of this sell-off, and the sell zone is somewhere around, let's put something on the chart. It could be 1998 or a little bit higher, 2007, but in between 27 and 1998. So it's like 100 and, no, it's actually 90 pips, the range right here. So I'm looking for sells somewhere around this area. If it goes any higher, that's because the data is going to be quite soft, and it allows gold to push higher. But because we don't know what the data is for CPI today, we have to be very, very cautious with any statements that, oh yeah, gold is full buy, full margin buy, or full margin sell. I mean, cut that crap, guys. Many people I've seen on Telegram that they're saying that, oh, you can see everything in the charts. I mean, tell me how the fish you can see the upcoming CPI data from the gold chart. This is basically impossible. You can see the expectation of traders and market participants, but how many times people were expecting something and the complete opposite has turned out because the data was way off from the forecast. So don't get fooled. Focus on the data. That's my advice. Do you support Israel-Palestine? Yeah, Dirjan said very correctly, we support peace. I mean, come on, cut that crap, guys. Here we trade. We don't care about religion. We don't care about skin color. We don't care about anything. We all from the same pipland. We purely focusing on trading. We don't care about all kind of things. In the meantime, I'm just going to do some administration, and feel free to ask anything.
Good morning, Thomas.
Ricardo, how you doing, brother?
Long time ago, my friend. How are you? Are you better?
We're very good, thank you.
Yes. Yes.
Much better. Well,
Still welcome back, Temas. Glad
Ferdy.
you're healthy again.
Oh, they are all shiny to talk today.
Yeah, they're slowly coming back. I mean, it's been a long time, but it's we get back soon.
Almost holidays, my friend.
Actually, this is the last week that I'm trading this year. I'm gonna
This is the last week, yeah.
Yeah, I mean, from the 18th, there's no point to trade, so I will be going on a holiday for sure. What about you? Are you guys finishing work, or what's the plan?
For me, maybe the last week as well.
I have my vacation on next week, 22nd.
And until January?
Yeah, until 31st, until 31st, December 31st.
21st of January.
22nd of December I started, and I will back to 31st of December.
You back on 31st? Wow, on New Year's
Yeah,
Eve.
31st. Yeah, I just planning to visit Singapore and Malaysia.
Wow, it's some exotic places.
Yeah. It's very nearby to India, actually. It's just traveling for 2.5 to 3 hours, actually. So it's very nearby.
Lucky you.
Where are you planning, Thomas? Any out of countries or anywhere place?
I don't travel during winter.
Uh-huh.
I hate travel. I hate traveling during winter. It's cold, too much luggage. I like to travel in spring and autumn. Summer, I usually go to Croatia because it's only a few hours away from here.
If
cheap,
you're
it's
liking
clean.
summer very much, you just plan to visit India. There is always a lot of summer times in India. Most of times, actually.
So, Engel Mayayo is asking, is there any correlation between NFP and core CPI? It's two different data. One of them is a labor market data, non-farm payroll, which tells you how many jobs have been created. And the other one is CPI, which is an inflation data. It shows the change in price of goods and services. Two completely different data. As of correlation, no, there is no correlation. I mean, actually there is correlation. The more jobs being created, the more, in theory, and this is theoretical, this is just textbook economics. So the more jobs being created, and let me show you the circular flow of income. So more jobs being created, the more money is circulating in the economy. And the more jobs created, more money is circulating in the economy, because those jobs, the households will get paid, or the workers get paid, and the disposable income as households are going to increase. So this is the circular flow of income. You can see that there are factories and households. These are the two, two of the agents in a closed or open economy. So jobs pay factor of payments, i.e. your salary. That salary goes to a household. Doesn't matter how many people live in. That money is going to be used to pay bills, to buy food, etc., etc. That money stays in the economy because it's being used to purchase things locally. And whatever left is going to be the disposable income that can spend on Netflix, culture, gym membership, etc., etc. So that money is circulating in the economy. Now, the more jobs being created, the more salaries being paid, the more money is being spent in the economy in normal market condition. And this is purely textbook economics, theoretical. So the more money is being spent, the higher inflation is going to be. So there is a correlation between NFP and CPI, but I haven't looked. This is just theoretical. I don't know what is the exact correlation, but this is theoretical. And I hope you understand. And if you have any questions, feel free to ask. So the higher NFP, in theory, should cause a little bit higher inflation, because if there are jobs, enough jobs to suck up all the excess unemployed people, i.e. the supply of labor, that means they're going to be more disposable income and more money floating around in the economy. Kurva, how you doing, Adrian?
Hey, I'm good. Hello, team. Nice to meet you.
How is life in Dubai? Long time.
Is very good. It's very good. Only the things on the house is the Dubai experience is very exhausting. Every day the plumbers are inside the house and fixing the roof and things like this. It's a little bit difficult, but now I have time to trading back again on the desk, and let's fucking go. Nice to meet you, brothers.
Very nice.
And sisters.
Very fucking nice.
Welcome back, Adrian. Thank you, guys. Thank you. Thank you.
Thomas, what's your prediction?
Oh, that finger, Adrian.
Will CPI come above or below expectations? Just a guess.
Hi, Ivan. What do you think? I want to hear your forecast first.
Well, it's just a forecast, but I think it's going to come below expectations, pushing gold initially higher. And then Powell will come out hawkish tomorrow, giving strength to the US dollar.
It's very much possible.
I think 1945.
I think Powell must stay in his tone hawkish, right? Because if he suddenly becomes dovish, then he might spur up the inflation again.
Lose reputation. Very important.
Yeah.
I mean, he's one of the safest central bankers, to my knowledge.
Oh, definitely.
One of the safest, and he would not risk for a single moment to cheer on, even if he gets like 3 good sets of data which shows deflation. He would not risk or run the risk to get caught in in a screw up, in a cock up.
Yeah, I have long swing position on Euro US dollar. So if we see rejection now on a weaker CPI, then I'll put my stop loss on break even before Powell comes out tomorrow. That's kind of my trade idea.
I mean, if you look at the previous the previous press conferences, Powell was mostly bullish, mostly hawkish, every single time. I don't expect him to change now. So these are the open positions I have, but unfortunately, I have to start closing down because, let me show you.
Trading is all about experience.
Sorry. So I have to close it down soon because, price is still dancing on the daily pivot, which is a pain in the ass. I mean, it failed to break yet. It's just dancing. I have a feeling it's going to break. It's going to be buy the news and then sell the fact, as Ivan said. But anything is possible. The most important, and this is the most important that you need to understand. And before we continue, I'd like to ask everyone on YouTube to please hit the like button and just send a message into the group chat whether you can see me and hear me. And Syed Ahmed is asking, hi Tomasz, what indicators do you use? I use mostly my eye and my brain. That's my biggest indicator. I'm using fundamentals and macroeconomics. I mean, these economic indicators are indicators because they're indicating the strength and the health of economy. This is by far the most accurate indicators, the most important ones. But if you're looking at the technical indicators, I use the pivots. I use Fibonacci. I use some key levels, for example, lapel key levels, which shows you the weekly opens, the weekly highs, today's close, etc., etc. Sometimes I look at the VRVP, which shows you the important levels, but basically you just need to look at the chart. It's quite obvious that yes, this was the big supply or demand zone. Sometimes I use moving averages, but it's very rare that I use moving average. And looks like gold started to edge a little bit higher. So I'm going to move stop losses into the safe zone. So the most I can lose right now is 300 pounds, 200 pounds, and now this one is to move up, and 400 pounds. So yeah, maybe I'm going to lock in 1300, 1300 soon, because that's fixed money. GBP AUD, I'm selling based speculation on weakness of the Eurozone, the sterling. Because we discussed this morning in the morning briefing that the UK economy has just printed some very soft labor market data. Average hourly earnings came down. Claimant count has gone up. Why is it not showing? Let me just refresh. Claimant count has gone up by 1,000 K, which is quite deflationary. Claimant count is basically benefits, or how many people claiming unemployment benefit. The UK economy doesn't do too well, so I'm shorting GBP AUD. And looks like gold is edging higher. Are you guys long or short?
Nothing.
I'm nothing, man. I have to wait the news. But
neither so far as well.
You still on that no news trade FTMO challenge or account?
The funded trader, yes, I'm still in, and I hope I have it a long time, my friend. This is 400k real account, so it's a real asset. So, I have to keep it. Save money to put on real account on Forex with my new friend Andrew.
He's a brilliant guy. He's a very good guy.
Good guy.
I love Andrei. He's a good guy. Andrei.
He delivered a nice description of your trading style, Thomas.
Did he? Where?
Yes. 2 or 3 days ago. The Andre from no, Michael Riding the Waves was it? Sorry, my fault.
Oh, did he?
Yes. You don't read it?
No, I haven't seen it.
Give it a try.
On his Telegram?
No, on the Discord channel, brother. On the Alpha FX Discord channel.
No, I haven't seen it. No, because I wasn't really reading or following anything. You know, I was off for a little bit.
Yes, sir. Yes. But your dick is very good just now.
My ding dong. My ding dong.
Everything is fine.
Yeah.
It's smaller now. It's smaller.
It's smaller. It was too big, so I had to ask the doctor to reduce a little bit. Because it was very gross.
Gigantic, yeah.
Big.
Gigantic.
I missed this conversation before training a lot. Thank you.
What, you missed talking about penises?
No, this is daily business.
Oh, naughty, naughty. I missed you guys.
I miss these naughty guys, my friend.
These are full-on perverts talking about penises and all that.
And now is on Habibi is on Dubai. Now is more.
No, I'm quite. Yes.
Yeah, right?
And Josh, I have the budget for this campaign you set across. I will make a few tweaks and we can finalize that this afternoon.
Yeah, should I get out Roy across all of it as well?
Who's Roy?
You keep saying to consider Roy in all the emails.
You mean ROI?
Yeah, Roy.
Someone is in a business meeting. And how many minutes we have left until CPI?
17.
17 minutes. And gold is pushing higher, ladies and gentlemen. Oh yeah. Who's sitting in the gold long positions?
Waiting for data.
I'm going to lock in profits because that is just way too much. Fucking hell.
Oh shit. Hey, bye. Welcome back, Taman. Welcome back.
First day back to trading. Absolutely fucking beautiful. Oh my god, look at that. 50, 60 pips just on gold. How nice is that? And people asking whether this position was shared before the move happened. Well, I let the team answer this one.
To see that, join Alpha community.
Yeah, absolutely. Somirio Fernandez is asking how can he get access to the morning briefings. You have to sign up, brother, to the Alpha community. If you go to alphafx.eu, go to purchase, and then once you, I'm sending the link into the YouTube chat, and once you signed up, you will have access to the learning portal where we have the weekly webinars. So basically, this is the recording that we do live every morning. But if you don't have time to join the morning briefing at 8:30 European time or 7:30 UK time, you can re-watch it. And this is how you get access to the morning briefing. And this is where I talk about macroeconomics, I talk about fundamentals, I talk about entries and stop loss and everything. But if you want to join live, in Discord, I send out the Zoom link every morning. And you can join the morning briefing. So this is what you, this is where I send the links for morning briefing. And you can join the morning briefing live, or if you don't have time, you can watch the recording. And this is where I send out the analysis. So every morning I get up like 4, 5, 6 a.m. I do the macroeconomic analysis, send out the anticipation, the forecast, etc. And then just before the market open, Europe cash equities. Aloha is asking everyday good morning briefing. I would say Tuesday, Wednesday, Thursday, 100% we have morning briefings. Sometimes Monday and Friday as well. But no, Fridays no, but Monday sometimes we do have, depending on whether we have enough things to talk about. So if there is nothing happened on the weekend, or if there was a bombing in Israel or Palestine, then maybe it's the best not to jump into trading on Monday. So Tuesday, Wednesday, Thursday usually. But analysis is sent out on Monday and Friday as well. Yeah, that's it. Okay, so we are approaching last week low. We are going to, I definitely advise everyone to take profit in 1994, although this is not financial advice. But it's getting into the territory where definitely you should take profit. I did take profit, and I'm happy with the result. Okay, I'm going to close down another gold position, because now I'm back again above 300k. And GBP/AUD isn't doing too well, but you know, these are not big positions, so maybe no, I'm going to close down that GBP/AUD. GBP/USD I'm going to close down because we have exposure to US dollar. Of course, the CPI is a US data. And now we just wait for the CPI. Depending on the CPI, we are going to buy or sell. So let me just clean up the chart. We have 11 minutes. So whoever is watching the stream, whoever is watching, now I'm going to explain how to trade CPI as a economist or as a professional trader. There are two different types of traders: fundamental and technical traders. Technical, you know, it's a wonderful thing, and I use technicals as well. I use indicators, I use many stuff, because the more things you use correctly, the higher chances you have to succeed in financial markets. But trading purely technicals is only going to take you to a certain place, but you cannot achieve anything else, because many people say that, oh, you can see everything in the chart. Well, tell me how you can see what Jay Powell is going to say on tomorrow's FOMC meeting minutes. Can you see it in the chart? No, you can't. So basically today we have a CPI. and we have 10 minutes. And in this 10 minutes, I'm going to show you how I trade fundamental news with macroeconomics. So the first thing I do every morning is I read Financial Times and Bloomberg and try to understand what I'm trading. If I try to understand the US economy, global macroeconomics, and fundamentals in general. The next thing is after I did the market sentiment and macroeconomics, because you need macroeconomics to understand the market sentiment, and then you can move down another level, which is the fundamentals. And fundamentals are the economic indicators. So we have CPI today. Now, who can tell me what is CPI?
Consumer Price Index.
And what does it represent?
Value of basic goods and services within an
10 minutes ago, you make a graph of this CPI.
It shows the change in price of goods and services.
Yes, the change in price of goods and services. So it's an inflation indicator. It measures the change from a customer perspective. Well done, well done. Very good. So, from a customer perspective. And I'm out of all gold position. Just let you know, I closed it down because now we pull back to the pivots. I'm done for the day so far with gold, because if everything goes as the forecast, gold is going to plummet. So CPI is a price indicator, change of goods and services. The difference between core and headline CPI is the core excludes food and energy, which is the two most important, two most volatile. So the forecast is set to be almost no change. So headline is minuscule change to the downside, but core CPI is actually increased month on month, no change year on year, which is quite inflationary. And if this turns out, so CPI is going to be higher than expected significantly, or there is no change, and gold is going to go down. And that's with the forecast. Remember that it's Christmas season, so November we could see some inflation due to the seasonality effect. But if CPI comes out lower than expected, now gold is going to revisit 2000 and then 2008, maybe 2020, but I would say it's 2008, which is more reasonable. And now it's simple as that. First you need to determine what you're going to trade, then you need to understand it, and then you need to understand the effect it might have on the macroeconomics or monetary policy. Simple as that. 2 years now, market has been driven by inflation and deflation and monetary policy decisions. So all you have to do is just read the chart. If CPI is higher than expected, meaning that if CPI comes out 3.3 or 3.2 or 3.5, so anything above 3.1, significantly 3.4, 3.5, sell the shit out of gold. And if core CPI is the same, if anything comes out lower than expected than the forecast of CPI, then it's going to be a big buy for gold for today. But I will close down profits immediately as soon as you're done. Any questions?
Nice to see you again.
Thank you much. I'm actually thinking to... Hey, Don, how you doing, brother? Haven't seen you for ages.
I'm good, and you?
I'm thinking to enter into a sell now that we close down the buys, because the buy is gone now, and depending on the data. So if we front run and if we go in line with the expectation, I think it's going to be a sell-off. But let's wait the data, maybe.
Data in 5 minutes. How you guys been doing?
Not bad.
Great.
December, yeah, the data is for November, but that's when the prices are going up for Christmas. Everyone just racking up the prices. So if the data is inflationary, higher than expected, I'm going to sell gold. If it's lower than expected, I'm going to buy gold. I don't have any open positions. I just closed down everything. By the way. We have 5 minutes.
I'm just preparing my CFA exam, and on one
which
part,
level?
it's a level 1.
Okay.
And on one part, it stays Richard French Pharma model, where they talk about how you cannot beat the market. And I've read a lot of
pharma.
That's the academic point, yeah.
Yeah.
And since I have studied a lot of autobiographies and my own results, it's just silly how they teach on CFA level 1 that it's practically impossible to beat the market. What they should have said, maybe if you're a hedge fund manager managing billions of dollars, then you might see a problem because of the lack of liquidity for you. But you see how they actually try to make you more of a long-term investment style in CFA.
Yeah, so pharma is famous about the efficient market hypothesis. It's good to know, but many people don't agree with it. It's really theoretical. It's interesting, definitely good to know about it. I think you can beat the market, but not with 100% success rate.
I think I agree, and that most people, I think pharma use mostly technicals. And then you use technicals, I mean, it's not the same at all, just like using fundamentals. Because with fundamentals, you can predict trends, GJ, Euro JPY, and other pairs. And I think you cannot make a model out of macroeconomic predictions in certain cases. It's way tougher to do it than, for example, to draw a trend line and say every time price rejects, we're going to have risk reward.
Yeah, you can only beat the market. Pharma's efficient market hypothesis states that you can only beat the market if you have inside information, which is illegal to trade. But that's for the stock market, or if you traded, for example, the 7th of October Israel attack, because that's definitely, there was some info insider trading. But we discussed this later.
Yeah, we have 2 minutes. I'll just say shortly. I haven't found anything talking about Jesse Livermore or some other world-class traders, who made great profits.
Oh,
and great
you won't
results.
find it in CFA book.
Yeah, didn't mention George Soros, Ray Dalio.
No. It's they don't talk about them. Superheroes.
Yeah, I had a dinner with Jack Schwager a few months ago.
Really?
And he was in Croatia. Yeah, he was in Croatia. And I asked him, what's the difference? And he said, really simple. He said, for most of traders, the best thing was to value French pharma because most of them don't beat the market. But for us, selected few interested in studying diligently and beating the market, then we shouldn't agree with pharma's model. So he actually gave two very valuable points, I believe.
I just want to
How much more seconds?
Sorry guys to interrupt. We have 45 seconds. So now we're going to focus on CPI, then we can go back into the discussion. Basically, if CPI is higher, then I'm going to buy. If CPI is lower, then I'm going to sell. And we have 30 seconds to go. "22 seconds to go." Read the chart, read the narrative. I'm on maybe on the short side. Then we have 13 seconds to go. 8, 7, 6, 5, 4, 3, 2, 1. And CPI is coming out right now. It came out 3.1, no change. Yep, sell, because it was in line with expectation. That was quite quite inflation. Now it's going up. What the fuck? Wait.
You have month over month is green. It's above expectations. Not significantly, but one data would say is above expectations.
Okay, let me just go to the data. So we have, okay, maybe just wait. Month to month, it's in line. CPI year on year in line. CPI month to month 0.1, but that's inflationary. If we interpret, everything is in line. No, actually the CPI year on year headline was lower, in line with expectation. So maybe the market interpreted as deflationary. Let's wait a little bit.
Looks like to the moon.
I'm not convinced that the market is going to go much higher, because it was in line with expectation, but it's still inflationary. So I'm going to enter into a small sell. But keeping, it's only a small sell. Maximum loss I can have is maybe keep it 1,000, 1,100. I think it was a buy then use and sell the fact type of scenario.
Arguably, CPI is still too high.
Exactly. If you look at the data, and that's what we talked about with Ivan. If you look at the data, it's in line with expectation. CPI year on year slightly below, but it's still insignificant in my opinion. I think it's a buy then use and sell the fact type of scenario. We are above the daily pivot, and this is for the technical traders. And let me just visualize the chart. So my stop loss is somewhere around here, and now I'm targeting 1968. Let's go back to the live position, and it's running in 30 pips profit.
Yes, me too. I'm selling as well. It's like my share chart. It's triggered my sell limit on 1996, and now it goes down, hopefully.
Very nice. 34 pips. Alright, kurva. I don't want to give back any profit to the market today.
I'm looking for 50 pips, then I close it down.
That's 50 pips a day, keeps the 9 to 5
yes,
away.
Brother, this is my my goal for the day. And
wow,
now,
60 pips already. What?
Okay, thank you guys. I'm
kurva.
done.
We made it. We made it again.
Done.
Unbelievable.
Alpha number one.
Okay.
We got it up. Well done, guys.
Okay, perfect. I call it a day.
Well done, everyone.
Go down to
Goodbye.
the beach. See you later, Adrian.
See you later. See you tomorrow for morning briefing. Is it tomorrow morning briefing?
Yeah, kurva, we have morning briefing.
Okay. For me, it's 11:30 Dubai time. Okay. We have brunch together. We have brunch together. Okay.
Oh yeah, I like
Sleep
it.
very
Are we
well.
going to have some schnitzel or
bratwurst?
Bratwurst, the big bratwurst, the sausage,
Okay.
yeah.
Okay, guys. Thank you. Have a nice one.
See
Bye.
you, Adrian. How nice is that? Good to be back, guys.
Got it both ways.
You got it both ways. Hell yeah.
Yeah.
Double whammy. Well, depending on what you mean by both ways, but you know, if we speak about
I was in a buy when the news come out, and I closed it on top and I entered.
No, he's speaking about trading.
Good. I don't like it both ways in other ways, but trading, yeah, we got it to the upside and to the downside. But now it's struggling with the freaking pivot. 60 freaking pips again. Very nice. I will be back in a second.
Amazing 5 minutes.
Okay, let's see. 623 people watching the stream, only 167 likes. Show some respect, show some love, guys. Oh, actually 200 likes, but still not enough. Good to see you, Andre, as well. Thank you so much, guys, for the lovely comments. Now, those of you who would like to join the Alpha community, you can do so. You can get my daily analysis. If you go to alphafx.eu, go to purchase. There's only a few spaces left. I'm going to close it down this week because you know, from next week I will be on holiday, and then from January I will double up the prices for the joining to limit the memberships, and because inflation is here as well, so I need to pay for my, you know, food shopping and all of that. Going back. Now we're having a bit of retest. If you go down onto lower time frame, you can see that price. Yeah, I would take profit. It's 50 pips, guys. Don't be greedy. We have New York coming up in an hour. It may or may not go any lower, but you know, be happy with 50 pips. Exactly the same way as Adrian did. He closed it down, booked the profit, and boom, he's gone. He's done. We're going to have FOMC meeting minutes tomorrow. So in between CPI and FOMC, after the New York Open, I would not trade at all because who knows what's going to happen. Andre, it is a good opportunity to join this month. Go for it, guys. You will never, you not regret it. Yeah, thank you. $68 pips, wow. Is it going to reach 70 or 100 pips? Is it going to break out from this channel? What do you think?
It's just waiting for Powell's speech by tomorrow. Maybe.
I'm still looking for a buy. I don't know why, but I don't buy this sell.
We're still in the channel and we're still dancing on the pivot. Let me show you trading view, which is more accurate in terms of charting. You can see it's still dancing on the daily pivot, which it signals to me get the freak out from this position soon. If it breaks the pivot and if it breaks the channel, breaks the previous high, and now we're bringing in the technicalities. So the fundamentals pointing into the downward direction, but it depends on the market sentiment as well. Market sentiment is quite mixed right now, bulls and bears, you know, inflation, deflation, all that. But in my opinion, the data was still inflationary, and the Fed, I don't see any reason why the Fed would cut interest rate based on this crappy data. Yes, it was in line with expectation, but I mean, look at the
Going down
numbers.
now.
It was insignificantly lower, and that's what I was explaining in today's analysis, that based on macroeconomics, if CPI is higher than expected or in line with expectation, then I'm selling gold, because you know, this number is insignificant to me. And now gold is edging lower. Let's see. We are running 100 freaking pips. Very nice. Very, very nice. Again, another 2,000 pounds is on the way. Let me just zoom in so it looks bigger. Lower. A quick tip: if you trading live, just lower the stop loss. It looks like that you have a sniper entry with bigger risk reward. It's like having a girlfriend with a small hand, so everything just looks bigger when she takes into her hands.
Oh God.
Punani.
Best Kunani.
Bro, does your wife ever listen to this streams?
Sometimes she does, and on those occasions I'm in a big trouble. But luckily, nothing I should worry about. Mohammad SM says, let's go drop 300 pips. Yeah, boy. But still, look at that. Price is still struggling with the daily pivot, struggling within this channel. So there is no guarantee that we won't have another retest, another push up at the New York Open. I mean, honestly, we caught 93 pips. How much was the drop? We entered somewhere around this stop. No, actually, it's 110 pips. Yes.
You can see the dollar index is falling pretty hard. So isn't that bullish for gold?
Then go and buy gold. I keep saying that dollar index is only one tiny part of the formula of the equation that determines gold price. And if you take anything out from the concept and you focus on one single thing, that's going to be quite dangerous, and you're going to burn your account. I mean, what example could I give you? Yeah, you should take into account every single variable. You should take into account, yes, the dollar strength, but is monetary policy or is market sentiment weaker than the dollar strength? No, absolutely not. It's more important to know and understand financial markets. I mean, it's called financial markets and not dollar markets. Yes, it's denominated in dollar, but you need to understand monetary policy, macroeconomics. You need to understand the dynamics in the financial markets. Yeah, brother, if you think that it's the gold is going to go higher because the dollar index is dropping, try to factor in other things as well and try to broaden your horizon. That's my honest advice.
There are times when these correlations are positive, and then there are times where they are negative. So, as Thomas says, one should always look at macroeconomic correlations. For example, in recession, dollar and gold can go into the same direction. Both can be bullish because both are safe havens. The same applies in restrictive monetary policy, while in expansionary monetary policy, they might go the other way around. Although, Thomas will surely agree, you always have to look at yield because they are great opportunity costs for investing.
But actually, the DXY is going up. Sorry, DXY is going up. The reason why it's going up because the market is expecting the Fed to hold interest rate higher for longer. So actually, Russian DXY is going up and not down. And if it's going up, that's bearish for gold, innit?
Yeah. It just started going up now.
And officially 104 pips, ladies and gentlemen. I think I'm going to call it a day, book another £2,000. And thank you so much. This is the Alpha FX. Enjoy the profits.
Thank you, Thomas.
You're welcome.
Thank you, Damar.
Those of you who would like to join the Alpha community, this is your chance now. I'm going to cancel the memberships from midweek, tomorrow or Thursday or Friday. I haven't decided yet.
Thank you, Thomas.
You're welcome, Destiny. And I'm going to raise the prices from January because I want something really quality to build here. I want motivated people in team, but the 50% is still on today. These memberships, when they're gone, they're gone. If you want daily analysis from me, feel free to join the community. And 119 pips. Boy. You guys made good money today.
Yes.
Yeah, definitely.
Yeah, definitely.
Yes.
Well done, guys. Thank you so
I'm
much.
late, but I make.
Never.
See you tomorrow.
Never late
See you
to make money.
tomorrow, my friend. See you tomorrow.
See you later. Bye bye, Butterfly.
See you tomorrow.
Have a good day.
Have a nice day. Thank you for the sharing.
Bye. Eat twice, Simon.